Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. And most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals on this show, as well as my twice a week long form podcast, because I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Monday, all. Nick, Isabella, let's go out there, you guys. And I got a very special guest for you guys, and I'm just going to bring him up right away. We're going to talk about all things intermodal today and what's going on in the market. You know, the rail is always in the news, and I'm going to bring on a guy who talks about this literally every single day to kind of give us a behind the scenes look on what actually goes on out there. So with that being said, I have Mr. Ari Ashe here today with the JOC. Ari, thank you so much for joining me.
Happy to do it.
Now I'm looking forward to this, man. It's you know, I started going live a couple of years ago to talk about some of the information that was out there and bring, just my perspective from my spot in the industry. And, what I love what you guys do the most is, kind of like we were talking about before we started going live today is you guys you're not always looking to be the first one out there. You guys are looking to get the facts right before you guys go out there. And I've always appreciated that about with you. And I've had Bill Cassidy on the show and Eric Johnson on the show as well. So I just wanted to let you know that before we got into it here.
I appreciate that. Yeah. I mean, it's a lot of hard work, but it's totally worth it. Yeah, it's totally worth it.
So what is going on out there in the intermodal world, man? It seems like there's a bunch of stuff that keeps popping up going on. You had put an article out here recently about something with Norfolk Southern was happening.
So they had a proxy battle.
Yeah.
When the East Palestine accident happened last year, it was a little, not impossibly, but somewhat late in the cycle to be able to muster the resources necessary to what's known as an activist investor, buy up stock and try and use your power of persuasion to get people to vote out the board of directors and the CEO and vote in a new leadership slate. So that's the reason why you didn't really see it last year. But this year you had enough time. And so there was this activist investor called Ancora Holdings, which some of your listeners may be familiar that they were an activist investor trying to unseat the CEO of C.H. Robinson and then put in Jim Barber, which was unsuccessful ultimately. So they were trying to do very much the same thing at Norfolk Southern, say this leadership is completely lost. They don't know what they're doing. We need to get rid of the board. We need to put in Jim Barber and again as the new CEO of Norfolk Southern, bring in a guy named Jamie Boychuk, who used to be the chief operating officer at CSX. And we need to, as they would say, tear it down to the studs and build all over again. And so it waged a very, very, very nasty battle. If anyone's interested, there's an article out there. I believe it's in Railway Age, one of the publications written by I think a Harvard or Yale professor that studies sort of the activist investors, talking about just how nasty it was. I mean, it got to personal attacks. They were going after sexual harassment claims against the current COO of Norfolk Southern. It just got into like really personal, dirty stuff. And so at the end of the day, we went through this cycle of about 4 or 5 months of the activist investor trying to knock out the current leadership, and the current leadership pushing back and saying, we're on the right track, just give us time. And the vote came in earlier this month on May 9th, and the activist investor only won 3 out of the 13 seats. And so the current leadership survived. And they weren't actually all that happy, the activist investor. They had for all of the dirtiness that they got involved in the campaign, they actually did it as well when they had commented on their loss, and they blamed the passive investors for the reason why the current leadership survives. So if you think of these mutual funds and ETFs that are out there that you would invest, your retirement money in, they would be considered. So you think of like a Vanguard or BlackRock, some of these companies that offer products that invest in hundreds, if not thousands of stocks. Those are the passive investors. And so this activist investor blamed companies such as that for the reason why they didn't win. And they said something to the effect of that it's on your shoulders, that if there's another train accident and people die, you're the one that has to take the blame, passive investors. So, I mean, to the very end, it was, they were very, very nasty about it.
Yeah, this is, I mean, is this what a company like Ancora does essentially is with them being, I'm assuming they're probably pretty heavily invested inside of Norfolk Southern at this point, as they were, and you said it was with C.H. Robinson as well. So they're out there trying to implement their own people on the board to get the essentially get the ship right. Because in your article here, you had put like Chatwick had said, like, it's, we're not here to fight, but you guys missed earnings for 6 quarters in a row. So it's like somebody on the other side of the fence could see where they're coming from. Like, hey, you guys, like we're heavily invested in you at this point. We need to remove it. But was it the nature that they took it on from a hostile standpoint? Does that happen often out there like this?
Sometimes. I would say not every proxy battle goes that far. I would say it's probably a minority, not an overwhelming minority, but a minority of cases get to that sort of dirty character assassination. That's the phrase I use. The last 3 weeks, it was completely character assassination of the current leadership of the Norfolk Southern Board. So in a minority of cases, it gets there. Really, the reason behind it, why an activist investor exists, is very similar in nature to like a private equity group, where private equity group buys up a company, says if we can get it right, get the right people, build up a profile, then 5 years from now we can sell it for 3 times the cost in which we bought it, and all the investors in the private equity firm share in those profits. So the Ancora has a similar model where it's not necessarily private equity, but they buy up shares of a company and say, we want to be able to turn around the share value by replacing the board, getting new leaders in, having them do the right job. And now 5 years from now, the share price is up 50, 60%. We sell the stock, and all of a sudden, everyone who's an investor in Ancora Holdings makes a whole boatload of money. That's really the idea behind an activist investor.
Yeah. It's, it's interesting because, you hear that, but like, are they taking in other market factors into those decisions, right? Because like I actually broke this article down of yours when you put it out there about the intermodal savings showed little movement in the first quarter. So it's like, I think we're almost at I don't want to ever call anything unprecedented at this point, but when you're looking at where shippers are going to allocate their freight, they're going to always explore what is the most cost-effective way to move anything. And I think that at least from my perspective, I see a lot of individuals out there like sitting here saying like, how can rates get like this? And how is this happening and that happening? It's like, do you look at 2021 and 2022 and what some of these companies' transportation spends were, comparatively speaking, and this is why you got to pull data sets out more than the last 36 months. If you look at that, obviously that was a black swan event, and these companies need to get their money back. Like they need to recoup some of those lost profits. That's just the way the world operates. And we've gotten to a point where, people like the largest providers that are out there can afford to take losses, right? They can afford to run at essentially a break-even standpoint right now. So it's like when I hear you talking about like the hostile takeover style situations that are out there, it's just like, is this a scene that's going to start unfolding at a lot of these larger providers where it's like, hey, we've been operating at a loss, or we've missed earnings for for 6 quarters, and now intermodal is just as cheap as, and then dry van comes in and it's just as cheap as intermodal. So it's like, where's it actually going to lead to at that point?
So I would say for the intermodal portion of the rail business, and you have to understand railroads carry a lot of commodities. So intermodal may represent, from a revenue basis, probably most companies 50 to 55, maybe slightly higher percent of revenue, but there's still a good, almost half of the pie that comes from forest products and coal and petroleum and products that don't, typically go on the dry van side on the trucking, but would go in tank trucks or flatbeds that have the corresponding rail component. But what I would say about intermodal and the importance at that 50 to 55%, and I've been thinking about this over the last 3 or 4 days. I was talking about it with an intermodal provider, 3PL this morning. To me, for someone to convert to intermodal, you need to really, in my mind, have 3.5 things really going for you. And so one would be the intermodal savings. 2 would be service reliability, because we know in the past that while truckload is reliable, the intermodal space, the trains, they have had periods of time where it's been very poor. Now it's been really good for the last 18 months, but service is a component of that decision. So we've got price savings, service reliability, and dependence. The half kind of comes in the environmental space, because there are shippers out there that care about the E and ESG. But as I speak to most shippers, I don't think that overrides some of the other components. It's sort of a secondary concern. And then the final one would be capacity. And to me, because trucking is so much easier to navigate for a shipper, you almost can set it and forget it, especially if you've got a 3PL doing it for you, that you don't tend to, for this tweener freight. This is why I like to say tweener freight that could, it could go truck, it could go intermodal, they kind of just, it could go either way. For that tweener freight, you need to have a market where it's hard to get a truck in order to win it to intermodal. If it's easy to get a truck and it's convenient, then there are shippers out there that say, I don't mind paying a couple $100 more, because I don't have to deal with all of the potential headaches that have happened in the past with intermodal. So to me, intermodal needs, the statistic I would look at is the tender acceptance levels in the dry van truckload industry. And to me, until those tender acceptance levels start falling from the very high numbers that they are right now, intermodal is going to have a difficult time getting that tweener freight, because that truckload option is just so convenient that it's hard to say no to something that you can set and forget.
No, that's exactly it. And, because inside of this article that you had put out that I had already, broken down about the intermodal savings showed little movement in the first quarter. You have an index inside of here that, that is labeled as contract truckload intermodal rate declines continue in Q1 of 2024. So, and then like what you have underneath here, and this is what I'm going to share my screen here quick to show this to everybody.
This is the chart that shows how sort of big it was during the pandemic and then flattish recently.
Yes. Yeah. Here, there we go. Now we got it. And so if we have this here, and if we go out, so here's like the overall, it goes all the way back to 2016 and then comes up. And what I like is how you guys inside of this show it, from the 6 month, and then you look at the 2-year mark, 3-year, 5-year, year to date, and then you can go inside of this and see this. So it's like when you're pulling this data out there, I mean, how are you compiling all of this? Where is this coming from?
Oh, certainly we could spend probably the rest of the episode talking about this. So I will sort of take the short version of it. From the contract side, the contract truckload relies heavily on our partnership with DAT, but there are truckload carriers I reach out to make sure some of those numbers are accurate. But we index 120 lanes in this data set. And so the truckload contract is largely DAT oriented. Our spot market number is a lot more mixed with interactions with specific 3PLs. And then on the intermodal side, contracts, it's a lot of surveying. And so we'll talk to asset-based providers, non-asset-based providers will speak to shippers, and we're constantly saying to them, particularly in like February and March and April, I'm saying, you've participated in a bunch of, to the IMC community, you've participated in a bunch of round ones and round twos of the RFP cycles. So not only the offers that you were given as far as guidance from either the railroad or some private guys like STG Logistics or Matson, companies like that. You not only have sort of numbers that you put out there to make your bid to the shipper, but you also know at the end of the day, if you didn't win, usually shippers tell you, hey, you didn't win this lane because we're going with X and you were off by Y amount. And so by constantly talking to all of these providers, you get a sense of where the offers came in round one and round two, and who ended up winning and how much they won by. So that sort of forms the basis of, okay, now we know, and then hopefully I don't commit an antitrust violation here, but in the Los Angeles Chicago corridor, then I know by talking to people that I've seen numbers on just a pure ramp to ramp basis. We'll throw out the trucking for a second, just the literal move on the train as low as $1,100, and I've seen it as high as $1,700.
Yeah.
And that comes through all those conversations, and then allows me to build out a model that says, all right, well, what's sort of middle of the road? Big name shippers probably going to be able to get that $1,100 ramp to ramp number from LA to Chicago, but that small guy is probably paying $1,500, $1,600. So how do I develop a number like DAT does with their median number that they report out publicly? How do I develop a median or a mean number that kind of is that center point where some are below, some shippers are below, some shippers are above? It's kind of in the middle. And so that's how we sort of generate that number. What I find interesting, Chris, about this chart is that trucking number, as I just described it, and the intermodal numbers come from completely different data sets.
Yeah.
I'm not... the intermodal stuff's coming from surveying and conversations. So the fact that these two lines are parallel, almost identically, actually shows how close these two markets are, because they're two different data sets that I'm merging together that show a remarkable correlation. And then over the last, as you said, six to 12 months has pretty much been very, very flat, very flat.
Now, for context, for everybody who's watching this right now and can't see, the truckload market is on the upper line here, and then the contract intermodal is the lower line here. Just
so you can see, for example, in that spike that you're right there, intermodal trailed a little bit behind the trucking market. You could see that line kind of went up 3, 4, 5 months later. Same thing on the back end, where it kind of started to fall a couple months after the trucking space. And so as you kind of go out and you learn from that, you learn that intermodal usually is a reaction to the dry van truckload market, not a leader of the dry van truckload market. It kind of follows behind.
Yeah. And to me, it's like, it's understanding this data, Ari, and like, it just puts it into such better context for, a lot of people, because, the overwhelming majority of the industry that's in the truckload space, for example, whether it's brokerage or asset based, it's small business, right? So a lot of individuals out there are making decisions based on a lot of this, but it's like, because from my perspective, you're never, if you're a small truckload provider or a small broker, you're never going to be able to compete on a price by price basis with some of these larger providers that you're talking about, and which you're bringing up there, like that $1,100 rate, ramp to ramp, LA to Chicago, hypothetical. Like, all of this is hypothetical that I'm about to say, you guys, because we're, like Ari said, I'm not trying to get some antitrust bullshit, but it's like, when you're going in there as a small provider trying to compete with that, like, that's where you're up against in today's current market. And I think, like, those are things to take into perspective from a business development standpoint. Like, it's going to be very, very challenging to compete with that out there, and then on top of it, that's just to compete on a price. Then you got to execute on that. And as we all know, selling's the easy part. Execution is where all the hard work starts to come in.
I would say, Chris, on top of that, that's not just truckload, that also does happen in intermodal. And so in a number of these cases, that LA to Chicago one's an example where I can tell you that one smaller asset-based guy told me he came in with a certain number, and they thought they had it, and almost literally at the 11th hour, one of the big three jumped in and said, all right, we'll give you that rate in that 11 to $1,200 ramp to ramp. And he lost it at the 11th hour. And that happens all the time in the intermodal space, where you have sort of the big three, the JB Hunt, Schneider, and Hub, and then everyone else is sort of behind and trying to find ways to kind of work within that.
So I see you in some of the articles that you put out and then others put out, you guys have a scorecard in there. What is the score? Like, what makes up the scorecard?
Sure. So the brief sort of background on it is, one of the frustrations I've had, and this actually did come up during the proxy battle in Norfolk Southern, is that there are metrics that the railroads report to the U.S. Surface Transportation Board: train speeds, on-time compliant, all these gaudy terms. But when you get into it, you find out that each railroad measures it a little bit differently. And so there's no way to go and say, Railroad X got 29.8 miles per hour on its average intermodal train the last 7 days, and Railroad B got 25 miles an hour, so A is doing better than B. Because A and B are going to say, we measure that number in different ways. It's an apples to orange comparison. So I said, well, then how do you judge service? How do you judge a performance? And so to me, it really honed in when one of the Norfolk Southern people said to me, what we provide is service. Service is our product. And so then I said to myself, well, wait a second. In and around my house, I have people that provide services all the time to me. Pipe breaks and I have to get a plumber that comes in, or my HVAC system's got an issue, I had to call a repairman in, or I need landscaping work around my house. I need a service performed around my house. And if I don't know who to pick, what do? I speak to neighbors, I talk to friends, I go on Google reviews, Yelp, Angie's, Home Advisor, whatever it may be. And then I make that decision in an educated way, because if I just hired someone willy-nilly for a $2,000 job and the person was shoddy and I have to spend a whole bunch of money to do it a second time, it's my money. I mean, I would be really, to be honest, pissed off. Yeah. And so that's why we have this crowdsourced data out there, so that we as consumers can make educated decisions, that we hire a company that's got an award for best service provider. We feel confident in that service provider is going to provide the right job the first time around. So we applied that same concept here. And so we said, okay, who's in a position to be like that home consumer? And so for the railroads, we said, okay, most shippers, unlike in the trucking space, you don't really have a direct relationship between the railroads and the shippers. Yeah. In many ways, in domestic intermodal, it's sort of like everything is brokered out. It's all brokerage, not direct carrier to shipper relationships. So we go to these 3PLs, the intermodal marketing companies, asset-based, non-asset-based. We say, here's an anonymous survey. We'll leave it completely anonymous. Here's some KPIs that we think are fair to judge the railroad on. Tell us which railroad's doing the best. Tell us which railroad's doing the worst. Tell us how CSX is doing in these 5 KPIs. Tell us how Norfolk Southern is doing in those same 5 KPIs. Give us a rating from 1 to 5 stars. And then we go to the shippers and we do the same thing. Okay, you're a shipper. You're not in a place to review BNSF because you don't deal with them directly, but you're in a place to review JB Hunt, because JB Hunt's the person you interact with. So then we come up with KPIs that are different for JB Hunt. And we say, rate JB Hunt on these 5 KPIs, 1 star to 5 stars. Do they, stuff like, and simple questions like, is their tender acceptance levels meeting your expectations? Yes or no? And so then we get the shippers to review JB Hunt and Schneider and Hub Group and STG and Knight Swift and all of these. C.H. Robinson has a small asset-based presence. Matson has a small asset-based presence. And then you've got, probably 3 dozen big non-asset providers out there. And we go to the shipping community and we tell them, your fellow shippers will use this information. Your fellow shippers are going to benefit when they're trying to convert some of that truckload freight over to intermodal, or they just kind of want to make a change within their intermodal network. They've got information that you're providing them anonymously that allows them to make that right decision the first time, rather than just making a random guess. So my final point on here would just be that if you are listening to us and you are either an intermodal provider, 3PL, IMC asset, or non-asset based, or you are a shipper who uses domestic intermodal, reach out to me, because this is open to anyone who uses 53-foot containers, either as a logistics provider or a shipper. And your information is, again, helping out, like my neighbor's helping me out, or Angie's List is helping me out, and it's completely anonymous.
So, and this is kind of how you guys, like, because I know with your inland conference that is coming up here, and because I'm actually gonna be there doing my show and everything from there, and I attended it a couple of years back. But this is kind of like this is a lot of the information that you guys talk about at your conferences, right? Is just bringing this down, but you guys are also bringing shippers and providers together to sit in the same room to kind of talk and break a lot of these a lot of this information down.
So there's this entire truckload track where, I mean, I could talk about it, but Bill Cassidy, who've had, and Eric are probably better to talk about that. So I'll leave it sort of to intermodal. To me, the intermodal side of this conference, there's a domestic and an international component. I know we haven't really talked about international intermodal, so I'll leave it brief there. But from the domestic component, to me, this is the conference where you can bring in the railroad and the intermodal provider and have a meeting with a shipper. So if you're a customer of JB Hunt, this is the place where you can go, where you can have a meeting with JB Hunt and BNSF at the same table over drinks or wherever you may go. Or if you're a customer of Schneider, you can have a dinner with Schneider and some of the UP intermodal sales staff, and kind of get everybody in that one space where it's the railroad, the logistics provider, and the shipper sharing a meal, sharing a drink, talking about the market, talking about what they need from the market. So that's one component. And then the second component, using my data, is we have an entire afternoon on the first full day. So the conference runs September 30th to October 2nd in Chicago, September 30th to October 2nd. And so we've got on that full day on October 1st, an entire afternoon where I'm in domestic intermodal. I'll spend 30 minutes going across, talking about these two indexes that we've been talking about. And then we're going to spend another 90 minutes going into, okay, now what does this mean for the shipper? We'll have a session where we're talking to the railroads and say, here's what our numbers show. Why are the numbers the way they are? How can you make sure those numbers, if they're good, stay good? If they're not good, how do you make sure that they get better? From a pricing perspective, we'll ask them, look at these numbers. What does it portend for, given we're going to be doing this on October 1st, the shippers' RFPs that are probably going to launch in early, mid, late November, somewhere in that November timeframe? What rate guidance can we give them on what they're likely to see when they launch those bids in the next 30 to 60 days? So there's a lot of that content component as well that people can take advantage of. And then the only other thing I'd point out, just because I think your listeners would certainly find this interesting, is that on the first day we have an academy. So this is not, typical on stage panelists, the whole thing. Yeah. This is teaching classes on topics that people want to hear about. And so the one I'm really excited about, there are a lot of them, but the one I'm really excited about is the customer service representative session, because when I talk to shippers, single-handedly, the biggest thing they tell me is the CSR, account manager, whatever you want to, call it in your nomenclature, is almost, if not equally important as what happens out there on the road or rails. Yeah. And this is trucking and rail combined. This is not one mode or the other. And so to the extent that you have I'll use the term CSR instead of account managers just for the heck of it, but if you have a CSR that's amazing at his or her job, then that company looks like gold to you, and you want to continue to have a 10, 15, 20-year relationship with them. If they're a bad CSR, now all of a sudden you're in jeopardy of losing that business to one of your competitors, because you're saying, I don't like the CSR, and therefore my whole experience with this company, this carrier, is soured. And therefore, maybe I think about going to one of the competitors. So we're going to do a whole class. JB Hunt's going to teach it, where how do you as a shipper start from a blank piece of paper and say, here's what our values are as a company that we want out of our trucking provider or our intermodal provider. Then how do I communicate? These are the attributes I want in that account manager during the onboarding process. How do I follow up 6 months, 12 months after being onboarded to say, hey, this is a right match. You got me the right person. I love this relationship. I love your company. Or conversely, hey, this is not the right match. Can we try again? Can we get the second time around? Maybe we'll get it right before it devolves into losing that relationship. So, we're going to teach a class. And then the final part they'll teach a class on is these silos, because I'm saying JB Hunt, I'm saying Schneider. these are big truckload companies as well.
Yeah.
So we've got shippers out there that don't like the fact that sometimes they feel like they're pigeonholed, where it's like, I've got an intermodal person in the company, a truckload person, and no one overseeing it to take a look at my freight once a year and saying, what goes truck? What goes intermodal? Overarching person that kind of oversees both people. So you feel like there's one fluid operation, as opposed to one person, big wall, another person, same company. So I'm very excited about that class, because I think it will teach shippers, but also logistics companies, a lot of good practices in terms of maximizing that customer experience.
And that right there is worth its price of admission. Because I think like everybody needs to look at that from a service provider's perspective, right? Like, are you actually covering all of your customers' needs, or are you farming that out internally? I think that single point of contact that you're discussing right there, Ari, is one of the most overlooked components of customer service that a lot of people, again, I get it. You have an intermodal department, you have an LTL department, you have a truckload department, cool. But most customers want that single point of contact out there. And then you internally, as the account manager or the sales rep or whatever, farm that out. And then you be that single point of contact. So I'm looking forward to that panel or event, the most, now that we're out there. But that's going to be in September 30th through October 1st, you guys. Check it out. Yeah, October 2nd. Oh, okay, perfect. Yeah, September 30th to October 2nd. Go to the JOC's website, you guys, check out and get more information on that. And as always, if you guys can't find it, hit me up. I will put you guys in contact with my friends over at the JOC. Ari, thank you so much for joining me this morning. How does anybody reach out to you, though, to find out more?
Yeah, you can find me on the JOC website, joc.com. Probably social media, the best way. You could find me on LinkedIn, Facebook. I'm no longer on X or Twitter or whatever it may be for various reasons, but Threads, a lot of the social media. So you just type in my first name, which is spelled Ari, type in my last name, spelled Ashe. Unique enough name that pretty much every single time I'll be the first one that comes up. Just follow me. I'm really good about checking social media. So if you feel like, hey, that's the best way I want to communicate news tips, or ask them about participating in the scorecard or getting the Intermodal Savings Index, I read my social media all the time, and I'm almost quicker than I am with email with the social media stuff. So feel free to reach out.
Perfect, you guys. And if you guys can't find Ari for whatever reason, hit me up. I will put you guys in direct contact with him. But that's going to be it for today, ladies and gentlemen. As always, if you guys got value in what you heard today, subscribe to the show, you guys. Share it out there to your network, because if you see value, your network's going to see value as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.